Investor Daniel Rasmussen of Verdad Advisers is never short on ideas or conviction. The pandemic-induced market plunge of 2020 turned a gut punch for the 34-year-old investor into a giant opportunity. Rasmussen, a former analyst at Bain Capital and hedge fund Bridgewater Associates, set out in 2015 to dispel a big myth on Wall Street. After studying thousands of buyout deals, he concluded that the bulk of private equity returns came from buyout artists acquiring small, cheap companies, which they then leveraged to the hilt through the LBO process. Rasmussen created Verdad Advisers with the idea of building portfolios of small cap value stocks and deploying leverage to mimic private equity portfolios at a fraction of the cost. When coronavirus hit in early 2020, Rasmussen's flagship leveraged capital fund, with well over $100 million in assets, was hammered. The plunge put its once impressive returns from a 2015 inception into the red. In May 2020, Rasmussen penned a note to investors titled, "An Apology for Small Cap Value," which lamented the worst quarter ever in the performance of small and cheap stocks. But it was not a capitulation. Instead, Rasmussen stuck to his guns. "We feel that small value deserves such an apology because, though the past few years have been painful for small value investors, this is perhaps a once-in-a-century buying opportunity in this deeply out-of-favor asset class," he wrote. In fact, Verdad's analysts had just finished a 76-page report titled, "Crisis Investing: How to Maximize Return During Market Panics," which showed that the best time to deploy money into the market was when high-yield spreads were above 600 basis points, a gauge of extreme fear. Based off of the research, Verdad was raising a new fund called the Verdad Opportunity Fund, which would draw investors' capital when junk bond spreads blew out to such levels, and invest in small, undervalued companies. Because of his flagship fund's woeful performance at the time, Rasmussen decided to raise his fund with no management fees and a 15% to 20% promote. By the time the fund closed, in May of 2020, plunging markets were a flashing green light to deploy money. Rasmussen and his team of quants screened for the cheapest, most undervalued small public companies in North America and Canada, but excluded companies they thought had a risk of going bankrupt. Verdad built a portfolio of 50 unloved companies, like teenage clothing store American Eagle Outfitters, automotive seat manufacturer Commercial Vehicle Group, Canada-based materials company Intertape Polymer, powerboat maker MasterCraft Boat Holdings, homebuilders KB Homes and Meritage, and outsourcing firm FirstSource. Rasmussen's team studied the fundamentals of the companies popping up on their screens to add a margin of safety in the uncertain economic backdrop.